folks, Dan Frio here with your closing bell for August 12th, 2025. So I thought mortgage rates would move a little bit more than this today, but the equities did. So what we're going to talk about in today's video is how consumer inflation, that number, actually did this to the market today. We got the Dow Jones, the NASDAQ, S&P, and even the Russell 2K. Two of these four hit record highs. So why didn't mortgage rates move today? That's what we're going to talk about in today's video. So without further ado, folks, let's get to it. So I do these videos each day to help you guys understand why those things are moving over there. Okay, in today's video, when I got up this morning, I did an opening bell and I actually showed you live when we got the news on the CPI, what happened to the markets. And we had the MBS market up 20-something points. We thought the rates were going to come down. We had the stock market doing this. It was up 100, 200, 300, then 400. Then we started watching the bond market and it's like, okay, it's up 20 ticks, but nothing really going on with rates. And we also have, look at this, there's only a couple banks throughout the day that cut their rates. So what are people waiting for on the sidelines? Well, let's get over to what my thoughts are. So here's the news that that's coming in the rest of this week. And this is why it's so important. Well, here's the Federal Reserve. Actually, they were created for two reasons: to keep these things in check. Okay, so what we saw lately is we saw the unemployment rate tick up just a little bit. Well, the number that came in like 2 weeks ago, remember that number came in? It was 250,000 jobs just went poof. And now they're saying it might be in the millions. So we're focusing in on this, but the news it was today, right through here. We got inflation numbers, and people were expecting inflation to tick up 2, 3, 4, 5, 6, 7, maybe 8% once again because of tariffs. Well, it's not really looking like that. Here's what it looks like. S&P, NASDAQ both notch record close as inflation reports gives Fed the green light to cut rates. So now why didn't rates really move? I'm not really quite sure, folks, because people were just dumping into the stock market, and I think the bond market was kind of just left behind. But this will start to move over the next 24 to 48 hours because of this. Okay, here's what we got today. We got consumer inflation, and it actually came in, we'll say it was a mixed bag of goods. I can't believe the market is up 500 points because of these numbers, but let's break them down. We go over to here, and we got core inflation month over month and year over year. It came in right here. 0.2 is expected to come in at 0.3, came in at 0.3. Core year over year was expected to come in at 3. It came in at 3.1. Okay. Then you got CPI month over month was 0.2, came in at 0.2. Now here's where the headlines hit. And this was, I was telling you guys yesterday, the CPI year over year was 2.8. It went down to 2.7. And that's what I thought because of the previous month's readings. So this is what's getting all the headlines right now. But it might be short-lived, and here's why. Here's what we're going to get tomorrow, really nothing other than some oil stuff. But then on Thursday, here's the other piece of this equation. We're going to start getting jobs numbers. This is initial jobless claims. How many people lost jobs for the first time? We're going to focus in on this. But the number we're really going to focus in on are these two right through here. Continued jobless claims. How many people are having a tough time getting jobs back? So as more and more people, even if the initial jobless claims stay steady at 220, if people aren't getting jobs back, this is going to pile up, and that's going to create some issues. But the PPI, this is producer inflation. This is where the tariffs are going to show up first. So this is what we're going to pay attention to. So the last reading was 0. It's expected to come in a positive 0.2. Well, let's just go with it this time because this is basically a coin flip because of tariffs. But I do have some exciting information for you guys. Let's get over to this. This is the bond market that we're going to focus in on in a second because this is what happened with rates today. But the first thing I want to show you guys is this young man right here. His name is Bollinger. And he used to be on the Federal Reserve, and now he was just added to the list of potential Federal Reserve officials, or the head of the Federal Reserve. I cut out, they just talk back and forth because these guys are buddies. They've known each other for years. But at one point he says, are you a dove or hawk? And he says, I'm really both. And then they started bringing out here. So why I'm bringing this up is this is where he really starts talking about rates in his stance on where rates are going from here, because he might be the one in charge next year. So let's get his get his thinking behind this, and then that'll help us understand the markets going forward a little bit more. So let's take it away with the interview on CNBC.
Though, and you correct me if I'm wrong, I thought you were warming up to the idea of a cut, and that maybe the risks weren't totally symmetrical in terms of the two mandates. Last time you were on, weren't you sort of amenable to at least talking about?
Yeah, I think the the committee put their rate cut program on pause when the tariff situation arose 6 months ago. And now you have 6 months of evidence. I don't really think tariffs cause inflation. Taxes don't cause inflation. And so what you're seeing in the data is very muted effects that are one-time increases in the price level. And so you're not really seeing anything. And the committee's coming around to the view, I think, that this is probably a one-time increase in the price level and is not interrupting the longer-term trend toward 2% inflation. So they're ready to come down. I think they'll cut here in September, probably again later in the year. And as I said last time, I think you could continue that into next year. So you'd probably get 100 basis points by this time next year, and then you'd be close to the neutral policy rate. So that's a good place to be if unemployment's in the low 4% range and you get inflation coming back to 2%.
So that's the take. So this might be the next head of the Fed, or a lot of them that think just like him. So they're thinking, again, like we were saying, and I've been saying this for months and months now. I'm like, the Federal Reserve controls this. Let's say for worst case scenarios, inflation's at 3, there's at least 100 to maybe 125 to 150 basis points they can pull out of this. Now, that doesn't mean that mortgage rates are going to go down. That's where he starts talking about other things. We need the strength of the dollar. That's going to help interest rates. We need the deficit to come down. We need GDP to grow, and all these things are what's in the works. So here's what he was saying, if we can keep the unemployment rate in the low 4-something range, we got GDP. Last reading was -5. It's now a +3. So this is coming in good. He's saying, and I think a lot of other people on the Fed saying, that these tariff hits are probably going to be a one-off event because it's going to pump up the price, right then and there, and that price is probably going to stay. Okay, so that's what his thoughts are there. So I guess I was a little bit shocked, just probably like you are, is mortgage rates, they really didn't go off of all this fantastic news that we got today. So not only did we have a lower CPI print, but we also have a potentially new Fed official coming in saying, he's all in for 100 basis points cuts. So now this is his comments. You guys are going to be saying, oh, taxes are inflationary and tariffs are inflationary. Folks, I'm just reporting the news. So let's get to that. Okay, so here's what we're looking at for Thursday. Like I said, initial jobless claims and then the producer price index there. And then on Friday, we're going to have retail sales. Is the consumer still able to hold up with all these increases in pricing? That's what that's only going to tell us. So now what's the likelihood the Federal Reserve is going to cut at the next meeting, or the next meeting after that, and the next meeting after that? Well, let's get over to this. The CME FedWatch Group is telling us at the next meeting there is now a 95% chance Federal Reserve is going to cut rates. I think this is probably on the low side. So I think for sure they're going to cut at this meeting, and then more and more data is going to come in between then and now that they'll be able to really figure out if they're going to cut at the further meetings going out. But I'm pretty sure that September cut is in the cards. But we're going to continue to watch the strength of the dollar, the economy, inflation, and all these other things that we talk about on a daily basis up through there that will and do affect these things over here. So folks, that is the why behind why really nothing happened today in the markets. So if you're trying to get yourself in a position because they're going to move here, folks, and I think they're going to move in a pretty good direction, pretty good amount as well. If you want to get positioned to take advantage of these so you don't miss it again, visit us at the Rate Update, folks. Let me tell you a little bit about what I do and who I am. So my name is Dan Frio. I've been in the mortgage business over 36 years, and if you'd love to work with me and use my experience to help you guys, if you're looking to buy or refinance, I'd love to help you. I'm also licensed in all 50 states as well as Puerto Rico, and the reason for that is I work at a federal bank. Yes, I work at a federal bank, folks. But the unique thing about this bank, and the reason why I'm here, is I'll say it this way, we're basically a federal bank that's also a broker, because we're set up with 33 other lenders. Why? Well, so we can help you guys out. So when you put in the application here, we want to make sure that we're competing for your business as well. We know you're out there checking, different companies to see what they can get you. We're going to do that on our end as well. So why don't you just leave the heavy burden of this tracking down rates for you? Leave it to us. So go to therateupdate.com. Yes, we are a federal bank that we will be working with you. We're not just a middleman or a marketing company. We are a federal bank, folks. So go to therateupdate.com. Here's where you can find more about me and my team. You can give us a call right there at the top. You can even ask Dan a question right through here. So ask me any questions that you have. But if you're looking to refinance right now, folks, click this button. What you're going to do is you're going to tell me what rate you are now and what rate you would like to refinance at. And when that rate hits there, I'll make sure I reach out to you. And I reached out to about 10 or 12 people today. So if you're watching this video, make sure you check your phone. You might have received a text from me for the RateWatch tool. If you've already gotten a rate quote and you want to check and see if I can give that, kind of review that with the 33 lenders that we have, we'll check out the loan estimate review button we have right through here. What I want you to do is get that best loan estimate out there. If you got 1, 2, 3, 4, make sure you narrow it down to the one best. Then you're going to upload it in our system right through here. I'm going to do a personalized video and get right back to you to see if we can save you money on the rate, if we can save you money on fees, and if we're saving you money on both, hopefully I can win you as a client. So that's it for today, folks. I hope you have a grand evening, and I hope you stay warm out there, folks. But God bless. I hope you have a fantastic night, and I'll be back here at the opening bell to let you know, well, there's really no data out tomorrow, but there will be action in the markets. So I'll make sure I come back and let you guys know all that's affecting these things over here and the whys behind it. Thanks for watching, folks. See you next time. Bye-bye.